Hey, my name's Curtis Lucas, and you're watching Empire Building. Wow, so Tesla posted their earnings report the other night, and the verdict is in.
Yeah! Got the Holy Spirit.
It was an impressive way to close out the year, and a total vindication for everyone at Tesla and Elon Musk, while short sellers are licking their $1.5 billion wound. Now, I know this video comes a little late to the party because, well, I was busy empire building, so I didn't want to just put out another earnings review video like everybody else. I wanted to do something a little different. Some of you may be wondering how far the stock will go. Some of you may have sold prior to the earnings call hoping to buy again at a discount. Some of you may have been sitting on the sidelines ever since Tesla made new highs. Yes, I am guilty of this one.
How do you plead, guilty or not guilty?
Oh, guilty, but with a real good excuse. You're going to love it.
What's my excuse? Just watch my video I sold all my Tesla shares too early. You'll find that link in the description. Or you may just be wondering if now is a good time to buy more shares and add it to your existing position. The bottom line is, what do you do after a move like this? If you are holding on to a position that you built for the long term and are not looking to add any more to it, then just sit back and watch the rest of us stress over decisions like this while you sip on Mai Tais and hit that like button at the bottom of the video. That goes for everyone. This is a new channel, and that is the best way for the YouTube algorithm to start sharing this video with other people on YouTube and to help the channel to grow. And hit that subscribe button if you haven't already done so while you're at it. I really appreciate it. Moving on. To answer this very important question, then your best source for information is going to be the earnings report. The earnings report is never more relevant than it is right after it's been published. It is a snapshot of the company with all the relevant data included. So the stock is up because of a few reasons. First, they beat on non-GAAP earnings per share at $2.14 compared to the expected average of $1.72. For those of you wondering what GAAP means, it stands for Generally Accepted Accounting Principles. It is a standardized method of accounting reporting so that profitability for all public companies are measured in the same way. Non-GAAP means that certain one-off expenditures are omitted because they're not typical expenses, and omitting them can sometimes provide a clearer picture of a high-growth company, like Tesla. If Tesla was not rapidly growing, then you would pay more attention to the GAAP earnings because they should not have very many non-typical expenditures. The other big beat was on revenues, coming in at $7.38 billion compared to the expected $7.02 billion. This is undoubtedly fantastic for Tesla, but this is not the whole reason why the stock moved up so much. Tesla's guidance for 2020 was better than people expected. They expect to comfortably deliver over 500,000 vehicles in the coming year. That is a minimum 36% increase year over year. They also revealed that production of the Model Y has already begun, and they showed us some photos to prove it. Originally, Model Y was not supposed to ship until fall of 2020. Then, in October, Elon told us that it would ship early in next summer. And now, they say it will begin deliveries at the end of Q1. So much for Elon time. In my opinion, one of the biggest factors that surprised everyone was that they added nearly $1 billion to cash on hand. For as long as I can remember, the skeptics would point to the balance sheet and scream about how they are burning through cash.
You know, my issues are I don't think that they're looking at the balance sheet.
Number two, they have a toxic balance sheet.
Obviously, there's a lot of off-balance sheet liabilities. I don't suddenly say all those things that I'm worried about with their balance sheet go away.
Well, now we are seeing $1 billion of positive cash flow being added to the balance sheet after adding $383 million to the balance sheet at the end of Q3. Bears can no longer make the argument that Tesla cannot sustain itself without capital raises. If they wanted to, they could do a capital raise, but with over $6 billion in cash in the bank and more being added every quarter, who needs to? So this is all good news. So what about the question? What to do now? Sitting on the sidelines while watching your favorite stock skyrocket is no fun at all. If you're worried at all about it, then I would consider cost averaging in over the long term and simply holding your position for the long run. One viewer who commented on my Facebook post said it best. Tesla stock is about time in the market, not timing the market. Although, I'm pretty sure he stole that from Charlie Munger. I did another video on this, diving deep into the numbers and outlining the incredible power of cost averaging, and Tesla was one of the stocks I analyzed. Feel free to check that one out if you missed it. Links in the description. Something that needs to be remembered is that the automotive industry is cyclical, meaning that every year, sales in the first quarter are less than they are in the fourth quarter. The earnings report is great, but there are even more insights in the conference call that you should take the time to listen to. Listen to what Zach Kirkhorn, Tesla's CFO, had to say about expectations from Q1 of 2020.
For Q1, please keep in mind that the industry is always impacted by seasonality. Additionally, we are in the process of ramping two major products, Model 3 in Shanghai and Model Y in Fremont, which I expect will temporarily weigh on our margins. We are also in the early stages of understanding if and to what extent we may be temporarily impacted by the coronavirus. At this point, we're expecting a 1 to 1.5 week delay in the ramp of Shanghai-built Model 3 due to a government-required factory shutdown. This may slightly impact profitability for the quarter, but is limited as the profit contribution from Model 3 Shanghai remains in the early stages. We are also closely monitoring whether there will be interruptions in the supply chain for cars built in Fremont. So far, we're not aware of anything material, but it's important to caveat that this is an evolving story.
A few things he mentioned there were that there will be additional expenses resulting from ramping up Model 3 production in Shanghai and Model Y in Fremont. Also, he mentioned that there is a government-required factory shutdown in China of a week to a week and a half. Generally speaking, it's actually 2 weeks. This is so people are given enough time to travel to spend Chinese New Year with their families. This is a very big deal in China, and if you've ever done business in China, you know what I'm talking about. The whole country basically shuts down for 2 whole weeks. Many of you may have seen the regular photos posted on YouTube of the drone flyovers at Shanghai Gigafactory showing progress since construction started there last February. The place was a ghost town last week. Of course, Zach was also right to mention that the impact of the coronavirus is very much an unknown. Fear can have a big impact on how people make decisions, and it's impossible to predict what sort of impact this could have on Tesla's ability to execute on deliveries. Obviously, these are short-term issues, but short sellers love short-term issues. Last year, Tesla faced a pullback in deliveries in the first quarter, and short sellers jumped on that to push their narrative that Tesla had reached peak demand and it was all downhill from here. None of this is to suggest that the price of the stock will fall off a cliff, but as far as results are concerned, I think we'll see Tesla taking a little breather. And yes, with all the hype around the stock, I think that there will be some profit taking in the next couple months. I don't think there's a giant hurry to go out and buy the stock if you haven't already done so. Just take your time and be ready to take advantage of any pullbacks in the price over the next few months. This could be the best chance you have left to add more Tesla to your portfolio. Remember to hit that like button and subscribe and share this video to help support the channel to grow. Thanks for listening. Now, let's get back to empire building.